Hello, everybody, and welcome back to the Schaefer Stock Market Podcast. This is Josh Selway talking to you guys again. I'm an editor at Schaefer's Investment Research. If you're new here, we do these podcasts once a week to give you a quick breakdown on some stock market news and some things we're looking at over at Schaefer's Investment Research. If you could, please subscribe wherever you are listening. And if you have been listening every week, I want to thank you so much. Our downloads and listenership continue to increase, so I really appreciate that. But again, please subscribe wherever you're listening. And if you want, leave a review. Let us know what we're doing well, what we could improve on. That would be fantastic. Let's jump into the news now. What I'm going to do this week is just give a quick breakdown of a few things that happened this past week. And then I want to jump into earnings season because this was the first big week of earning season. And next week, we have a lot of big names coming up as well. So I just went through some of the data to find a few interesting names to talk about that traders may want to pay attention to. But first, as I said, let's hit on a few of the nuggets from this past week. Earnings were mostly strong this week. I believe 70 or so of the S&P 500 index companies have reported already, and most of them have surpassed expectations. So on a relative basis there, at least the numbers, corporate earnings have been stronger than anticipated by analysts. So that could be viewed as a positive thing. And in particular, the big banks, mostly with strong results. JP Morgan, in particular, a very strong showing there with earnings earlier in the week. And then more recently, we had Morgan Stanley just on Thursday. That stock rose thanks to the company's strong earnings report. Mostly due to their fixed income business, the bond trading there, bringing in more money than people were expecting. And actually, that Morgan Stanley move, we wrote about over on the website, schaefersresearch.com. We wrote about how options traders had been buying Morgan Stanley call options ahead of that event. So that move was good there for Morgan Stanley options traders as that stock moved higher after earnings. Another big name that is rising in today's trading on Friday is Coca-Cola, and this is a mirror image of what we saw from Coca-Cola last quarter, where we are seeing more strength. It was a revenue beat for Coca-Cola, mostly driven by growing demand for its zero sugar sodas. This is something I used to talk on older podcasts, the shift in consumer appetites, literally where people are looking for healthier foods. And this is having a lot of effect on many different companies, particularly packaged food companies and companies like Coca-Cola, Pepsi. But for Coca-Cola, they've handled this shift pretty well. They have these zero sugar drinks, and demand for those drinks has been driving sales. And not only that, but they're recently introduced Coca-Cola coffee, Coca-Cola Plus coffee. I'm not even personally sure what exactly that product is. I've never seen it, I don't think, but apparently it's been doing well with consumers. That helped drive another sales beat for Coca-Cola, which was the same that we saw last quarter as well. Those two businesses there helping push that company's stock even higher. So all good news there for Coca-Cola. So overall, good week for the markets. The Dow is on pace for its second straight weekly win. Of course, we still have that trade uncertainty lingering in the background as always, but stocks still holding up fairly well in recent weeks. And another thing I should note that just came out today was this economic data out of China that showed that the economy was not growing as fast as analysts or economists were expecting. So that should be noted as well. But a higher week for the U.S. stock market. And really, if we want to look at some areas of weakness this week, I should point out these pretty substantial losses as far as software stocks go. In particular, earlier in the week, we covered Workday, ServiceNow, and Slack Technologies, just for to mention three names in particular that we covered. And all those stocks are moving lower for different reasons. Workday was, at the time of our writing, was down more than 12%. That's a software company there. That stock was down more than 12%. Stifel cut its price target and said that growth in some of its segments were slowing, so that stock got hammered. But there were a few different ones, and even today, big losses. I'm looking one name that for a while kept going higher and higher from this group was Alteryx, ticker AYX, and that stock has been getting absolutely crushed in recent weeks. Going back to over a month, going back to September, it was at $140 or so. And just in the past couple days, it's fallen all the way down to $95, down 6.5% just today. So that is just one stock from this group from among software stocks that's been getting hammered. So not exactly sure what's going on with that group. Of course, that is composed of many growth stocks. So it's interesting to note that that group has been getting hammered. Other names getting hit hard: Splunk, Cloudera, all these names, are posting pretty big losses this week. So that is one group that is struggling, even though we're seeing some strength from the broader market. And I want to move right into a few other names that we cover this week just to give some greater exposure to what we're writing about over on the site. Another name that I wanted to discuss that we just wrote about today is Tandem Diabetes Care, ticker TNDM. And I wanted to bring that up because earlier in the year, that stock had been making a lot of big moves. It had a huge bull gap in February. But since that bull gap, it's basically been moving just sideways on the chart. If you pull up a chart of Tandem Diabetes Care, mostly going sideways along that $60 area, and resistance up overhead at the $75 price point when it has tried to break out. But we just had a bull note from Guggenheim, who said to buy the stock, sent a notable $76 price target because, as I said, that $75 level had been serving as a ceiling there. So it's interesting to see some traders, because we had bullish options trading as well on Tandem Diabetes Care. And that stock right now is trading right above its 200-day moving average. So that could be a name to watch there. Is it could be on the verge of breaking out or making a big move one way or the other after months of sideways trading. And there's also an interesting upgrade on Cirrus Logic, ticker CRUS. That is an Apple supplier, which comes into play here with this analyst note from we had from Barclays here, which upgraded the stock just to equal weight, but still notable here because they called out the fact that there could be big tailwinds on the way, especially going into 2020 when they're expecting a 5G iPhone model release. So they think that could be a big move there if that comes from Apple in 2020. That could be good for Cirrus Logic. And I try not to mention Tesla on this podcast because I try to cover things that aren't usually discussed a lot, and Tesla tends to be in the news quite a lot. And there's so many blogs and even specific podcasts just for Tesla out there if you're interested in that stock. But I should note that the stock was, when we wrote about it earlier in the week, pacing for a 9th straight win, which would be, from what we could see, its longest winning streak ever, I believe. So pretty interesting move there from Tesla. It got approval to begin manufacturing in China. Of course, it has some big goals for its Model 3. So Tesla stock trying to gain some momentum, trading around the $260 price point when we last checked. Okay, as I said at the top, I want to break down some data on a few companies that are set to report earnings in the upcoming week and just give you a few stocks here that the options market is expecting certain things for, or that just a few stocks that have an interesting earnings history. Maybe they've made big moves in recent quarters. A few stocks here that are on several quarter losing streaks as well. So let's just jump right in here and look at the first name I want to touch on, and that is Chipotle. So I've talked about Chipotle a few times on the podcast because the stock has been one of the biggest winners on Wall Street in the past year or so. And actually just today I pull up the stock and it just received another upgrade, this time from Bank of America Merrill Lynch. But for Chipotle, the earnings are scheduled for next week after the close on Tuesday, August 22nd. And what's interesting about Chipotle here is that the stock has been great. In last quarter, the shares moved 5% higher the day after earnings. This time around, though, the options market is implying an 8.4% move. If you looked at the money, implied volatility, what they're expecting. So a big move expected from Chipotle stock. And, relatively speaking, that may not seem like a big move compared to the fact that the shares have averaged a 10% swing, single day swing after earnings over the past 2 years. But much of that is due to the 24% move it made all the way back in April 2018. In more recent quarters, the moves have been in the single digits there. So a fairly big move expected from Chipotle stock when it reports next week, earnings on Tuesday. And as far as what options traders may be expecting, call buying has remained more popular than put buying at the major exchanges there, which has been the norm. That call buying, those levels are right in range with what we've seen historically from Chipotle. So nothing outrageous on the options trading front, but traders still remaining hopeful for that stock. All right, this next one is one of the more interesting ones, and this is Caterpillar, ticker CAT. Of course, that's the Dow component maker of all those industrial machines, excavators, all those types of good things, heavy machinery. That stock has actually made a negative single-day move after earnings for 6 straight quarters for Caterpillar. So they are trying to break that streak when they report next week before the open on Wednesday, the 23rd. Right now, the options market just pricing in about a 5% swing for Caterpillar, which is right on average with how it's moved after earnings in the past 2 years. So Caterpillar will be trying to break that epic earnings losing streak that's been plaguing it for several quarters now. And speaking of Caterpillar, we did just write up a blog about how it was downgraded at Morgan Stanley to equal weight, and the brokerage firm also cut its price target, citing several potential downside risks around the company. Many of its business segments has Morgan Stanley worried. So check that out over on our website, schaefersresearch.com, if you want to see more info on Caterpillar. Next, I want to bring up Ford, just because Ford has been notably volatile after earnings in recent quarters. Last quarter, when it reported in July, the shares fell 7.5% the day after earnings. The quarter before that, the shares jumped 10.7% after earnings. So big moves, and even with those big moves in recent quarters, the average daily move after earnings in the past 2 years is just 5.7%. So notable uptick in post-earnings volatility from Ford in recent quarters here. And this comes after Ford just last week announced what it's calling the largest fleet of charging stations for electric vehicles in North America. So some extra buzz there for Ford going into earnings. And it did just team up with Amazon too for Amazon's home services, using that to install home charging options for electric cars, which they're going to unveil some electric vehicles apparently next year as well. So worthy of keeping an eye on Ford. Right now trading around $9 per share. So it'll be interesting to see how Ford performs after earnings next week. Right now scheduled to report after the close on the 23rd. Next up is theme park operator Six Flags, ticker 6. Six Flags is right now scheduled to report earnings after the close on Tuesday the 22nd. But what's interesting about Six Flags is that last year in this quarter when it released earnings in October, the stock fell 16% in the following session. So hopefully the numbers for the same quarter this time around will be better off for Six Flags. The stock has averaged a next day move of 6.5% after earnings over the past 2 years, which is basically what options traders are pricing in this time around. But I should note that options trading at the major exchanges shows unusual put buying on Six Flags ahead of its quarterly earnings report. So that'll be something to watch as well. And finally, the last name I wanted to mention is Snapchat parent Snap, because the options market is pricing in a 20% swing for Snap shares next week. The company reports earnings after the close on Tuesday, the 22nd. And this comes last quarter, the shares jumped almost 19% after earnings. So Another big new move could be coming, according to options traders here, and data from the major options exchanges shows that the 10-day call put volume ratio is approaching 9 and is already at annual high levels. So call traders are getting behind Snap at unusual rates there. And we actually just had an article go up on the site about Snap and how one options trader bet pretty big on Snap here with a January bull spread, expecting more upside from the social media stock. So I would recommend you check that out as well over on the website. But I'm going to leave it right there for this episode of the Schaefer Stock Market Podcast. If you want more information on earnings season, head on over to schaefersresearch.com. Check out our free newsletters where we're covering all the must-know earnings activity and all the things you need to know throughout the trading day. Check out Schaefer's on social media, on Twitter, Facebook, StockTwits, and Instagram as well. And like I said, please subscribe wherever you are listening to this and continue to listen. I really, really appreciate it. Hopefully I'm providing some easy to understand and quick insight into the markets to get you in, out, and on your way. But until next week, I'm heading out. Thank you so much for listening, guys. I will talk to you soon.